There's a quiet shift happening right now in the market, and most investors are completely missing it. In this video, we're breaking down two AI-driven healthcare companies that are building platforms powerful enough to reshape modern medicine. One where artificial intelligence is not just improving efficiency, but fundamentally changing how diseases are detected, treated, and even prevented. These are infrastructure-level businesses operating at the intersection of data, biology, and machine learning, with the kind of long-term relevance that can quietly create outsized returns. Let's get into it. The first company is Tempus AI, ticker symbol TM. Before we even talk numbers, you need to understand what this business actually is, because that's where the real story starts. Tempus AI is not just another healthcare company using AI as a buzzword. It is building one of the most valuable assets in modern medicine, a massive, continuously growing dataset that connects clinical outcomes with genomic data at scale. Think about that for a second. Healthcare has always had a data problem. Hospitals have records. Labs have results. Researchers have studies. But historically, all of this information has been fragmented, siloed, and difficult to connect in a meaningful way. Tempus is solving that. They are aggregating clinical data from patients, combining it with genomic sequencing, and then using artificial intelligence to find patterns that humans simply cannot detect on their own. And this is not theoretical. Doctors are already using Tempus platform to make real treatment decisions, especially in areas like oncology, where precision matters most. This is where the moat starts to become obvious. The more data Tempus collects, the better its models become. The better its models become, the more valuable its insights are. And the more valuable those insights are, the more doctors, hospitals, and researchers want to use the platform. That creates a powerful feedback loop. And once that loop is established at scale, it becomes extremely difficult for competitors to replicate. Because you cannot just wake up one day and decide to build a dataset of this magnitude. It takes years of partnerships, infrastructure, regulatory navigation, and trust within the healthcare ecosystem. Now let's layer in the growth drivers. Tempus operates across multiple revenue streams, which is critical for long-term durability. One major segment is genomic testing. They provide advanced sequencing services that help identify mutations and biomarkers in patients. This is already a growing market on its own, as medicine shifts toward personalized treatment. But Tempus doesn't stop there. They also monetize their data. Pharmaceutical companies are willing to pay significant amounts to access high-quality, real-world clinical and genomic datasets. This helps them accelerate drug discovery, improve trial design, and increase the probability of success in development pipelines. That is a massive opportunity. Drug development is incredibly expensive and risky. Anything that improves efficiency or reduces failure rates becomes instantly valuable. Tempus is positioning itself right in the middle of that value chain. And then there's AI-powered clinical decision support. This is where the company's platform becomes directly embedded into the workflow of physicians. Instead of relying purely on generalized treatment protocols, doctors can leverage data-driven insights tailored to individual patients. That is a fundamental shift in how medicine is practiced. Now let's talk about what the numbers are telling us. Tempus has been growing its revenue at a strong pace, driven by increasing adoption across its testing services and data offerings. The company is generating hundreds of millions in annual revenue, and what stands out is the consistency of that growth trajectory. This is not a one-time spike driven by hype. It is the result of expanding relationships with healthcare providers and increasing demand from pharmaceutical partners. Another important detail is that a significant portion of Tempus revenue is recurring or tied to ongoing usage. That matters, because recurring revenue creates predictability. And predictability allows a company to reinvest more aggressively into growth without constantly worrying about demand volatility. Now, is the company profitable yet? Not fully, and that is exactly what you would expect at this stage. Tempus is still heavily investing in scaling its platform, expanding its dataset, and strengthening its AI capabilities. In other words, it is prioritizing long-term dominance over short-term profitability. For the right kind of business, that is not a weakness. It is a strategy. What you want to watch here is operating leverage. As the dataset grows and the platform becomes more widely adopted, the incremental cost of delivering insights decreases. That means margins have the potential to expand significantly over time. And this is where things start to get interesting from an investor perspective. Because when you combine strong revenue growth, high margin potential, and a data-driven moat, you get the kind of setup that can compound quietly for years. Now let's talk about why this matters in the bigger picture. Healthcare is one of the largest industries in the world, but it is also one of the most inefficient. There are delays in diagnosis, trial and error treatment approaches, high costs driven by lack of precision, AI has the potential to address all of that. And companies like Tempus are not just participating in that shift. They are helping to define it. This is not about replacing doctors. It is about augmenting their decision-making with better data. And the value of that cannot be overstated. Because when outcomes improve, everything else follows. Costs decrease. Patient satisfaction improves. Drug development becomes more efficient. Tempus sits at the center of all those improvements. Now, of course, no investment is without risk. One key risk here is execution. Building and maintaining a dataset of this scale is complex. Integrating with healthcare systems is not easy, and regulatory considerations are always present in this industry. Another risk is competition. There are other players trying to build AI-driven healthcare platforms. But again, this comes back to the moat. Data scale and quality are incredibly difficult to replicate, and Tempus has a meaningful head start. The final piece to consider is valuation. Companies operating at the intersection of AI and healthcare often trade at premium multiples. So the question becomes whether the long-term growth justifies that premium. And that is where conviction comes in. If you believe that AI-driven precision medicine will become a core part of healthcare over the next decade, then owning a company that is building the infrastructure for that shift starts to make a lot of sense. Now here is the key takeaway. Tempus AI is not just selling a product. It is building a platform. And platform businesses, when they reach scale, tend to be the ones that create outsized value over time. That is exactly why the smartest investors are paying attention here, even if the broader market hasn't fully caught on yet. If this resonates with you, you're exactly who this channel is for. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now, let's move to the second company, because this is where things take a completely different angle on AI and healthcare, and arguably an even more disruptive one. The second company is Recursion Pharmaceuticals, ticker symbol RXRX. If Tempus is building the data infrastructure for precision medicine, Recursion is trying to reinvent how drugs are discovered in the first place. And that distinction matters, because drug discovery, as it exists today, is slow, expensive, and filled with failure. It can take over a decade to bring a single drug to market and cost billions of dollars in the process. And even then, the majority of drug candidates fail somewhere along the way. That is the problem Recursion is attacking. But instead of approaching it incrementally, they are approaching it from a completely different angle. One that combines biology, automation, and artificial intelligence into a single integrated system. At the core of Recursion's business is something called a biological data engine. Here's how it works. The company runs millions of automated experiments on human cells. These experiments generate massive amounts of imaging data, capturing how cells respond to different genetic changes and chemical compounds. Then, they feed all of that data into machine learning models. The goal is to map the relationship between genes, proteins, and disease in a way that has never been done before. This allows Recursion to identify potential drug candidates much faster and with a higher probability of success. Think of it like this. Traditional drug discovery is like searching for a needle in a haystack, manually. Recursion is trying to build a system that scans the entire haystack in seconds and tells you exactly where the needle is likely to be. That is a massive leap. Now let's talk about the moat. Just like Tempus, Recursion's advantage comes from data, but a very different type of data. They are not just collecting information. They are generating it. And that is important, because the scale of their dataset is directly tied to their experimental platform. The more experiments they run, the more data they generate. The more data they generate, the better their models become. And the better their models become, the more efficient their drug discovery process gets. Again, you see that same feedback loop. But here is where it gets even more interesting. Recursion is not doing this alone. They have formed strategic partnerships with major players in the pharmaceutical and technology space, which provides both validation and resources to scale their platform. These partnerships are not just about funding. They are about combining expertise. Recursion brings the biology and the data engine. Their partners bring drug development experience, distribution capabilities, and additional computational power. That combination significantly increases the chances of success. Now let's talk about the financial side. Recursion is still in the early stages of monetization compared to more mature healthcare companies. Revenue is primarily driven by partnerships and collaborations, rather than product sales. That means the income can be lumpy. But that is not necessarily a negative, because the real value here is not in current revenue. It is in the pipeline. Recursion has dozens of programs in development, targeting a range of diseases, including areas that have historically been difficult to treat. Each of these programs represents a potential future revenue stream. And if even a small percentage of them succeed, the upside can be significant. This is the classic biotech risk-reward profile, but with a twist. Because Recursion is not relying on a single drug or a handful of candidates. It is building a system designed to continuously generate new opportunities. That diversification reduces risk over time, while still preserving the potential for outsized returns. Another key detail is the company's balance sheet. Recursion has maintained a strong cash position, giving it the runway needed to continue investing in its platform without immediate pressure to raise additional capital. That matters in a space where capital requirements can be high. It gives the company flexibility. Now let's zoom out and look at the bigger picture. If Recursion's approach works, it does not just create a successful company. It changes the economics of drug discovery. Faster development cycles, lower costs, higher success rates. That would have ripple effects across the entire healthcare system. And this is why investors are paying attention. Because this is not just a company. It is a potential paradigm shift. Now, of course, this comes with risk. Drug development is inherently uncertain. Even with better tools, there is no guarantee that any given program will succeed. And while AI can improve probabilities, it cannot eliminate risk entirely. There is also execution risk. Scaling a platform of this complexity requires precision, coordination, and continuous innovation. And then there is the timeline. Investors need to be patient. This is not a story that plays out in quarters. It plays out over years. But for the right investor, that is exactly where the opportunity lies. Because by the time the success is obvious, the market has usually already priced it in. The real gains tend to come from identifying the shift early and positioning before the crowd catches up. Now here is the key takeaway. Recursion Pharmaceuticals is not just trying to discover drugs. It is trying to build a machine that discovers drugs. And if that machine works at scale, it has the potential to unlock value far beyond what traditional biotech models can achieve. That is why this stock is quietly showing up on the radar of investors who are thinking 5, 10 years ahead, not just the next earnings report. Now stepping back, when you look at both of these companies together, something important becomes clear. They are attacking the same industry from two different angles. Tempus is focused on improving how we understand and treat disease using real-world data. Recursion is focused on improving how we discover new treatments using experimental data and AI. One is optimizing the present. The other is building the future. And both are leveraging artificial intelligence as the core driver. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now here is a question worth thinking about. Which approach do you believe has the stronger long-term advantage? The company building the largest real-world clinical dataset, or the one building the most powerful drug discovery engine? Let me know your thoughts in the comments. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.